in your book, you really go through the problem. What is the problem? Give us your synopsis as best you can about what is the problem today.
The problem today is that inequality is at its highest that it has been probably ever. And we have the greatest inequality in the developed world and the greatest immobility of our society. And people don't understand in America the depth of the problem. It's about people, it's about society, it's about lack of jobs, lack of education. It's a problem where 60% of all American homes have to borrow money at the end of each month.
So let's put that chart up because it comes off of the numbers you produced in your book, which is really stunning. If you just take money in, money out, month by month across the entire 10 deciles, you'll see that you have to get to the 60th decile before you break even.
That's exactly right. And so that's an enormous problem.
So does that just mean basically that 60% of the population has to borrow each month to survive? Is that what that means?
Each home.
Each home.
Correct. That's what it means. And if you go to the next upper middle class, the next 20%, at the end of each year, they have about $8,500 disposable income. So that gives you a sense of the difficulty and the challenge for how these people live. They really struggle. They're suffering. Our economy is not right for all Americans.
It has not always been thus. I mean, one of the other things you do in your book is say, let's take 1945 to 81 and compare the bottom 90% with the next 9% with the 1%. And basically everybody was doing pretty well, at different rates and things like that. And then you take 81 to 2014, and actually in real dollars, the bottom 90% went down 3%, while the top 1% went up 176%.
Right.
What caused that?
Well, what's happened, let's give a shout out to free enterprise capitalism. It works. It works magnificently well. The challenge is, what do you ask free enterprise capitalism to do? In those first 40 years, it says, work with society. Everybody should win, inclusive growth. And it was. Now we're saying, let's maximize short-term shareholder profits. And you know what? It works. The shareholders are doing magnificently. And the rest of the population is suffering. That's reality.
So, Torsten, in your work, what do you find in terms of that?
Well, the reason why we also have worried about this and also done a lot of research on this area is that the data is exactly showing a quite worrying trend. And the biggest question for investors is, should I just ignore that? Or should I begin to focus on what are actually the policies that need to be done? And one thing that we have worried a bit about more recently in a broader context is the chart that you just saw there, namely what was the outcome of the corporate tax cuts. And we did see a boost to capex, but we also saw a boost to buybacks. And as it happens to be that when buybacks go up, of course, it lifts stock prices, which benefits those that hold stocks. So that's not to say that there has been any distributional consequences as such of the tax cut. It's just to say that it's pretty clear that we need some policies that addresses this head on if the politicians wants to do something about it.
And the question arises, where do those policies come from? We've now had Ray Dalio, as we talked about earlier, also Jamie Dimon last week coming out, and they had somewhat different prescriptions. Both of them really had to do largely with what the government should be doing, in taxation and investment in education, things like that. We can put up Ray Dalio's points, for example. It's going to invest in education, childcare, healthcare, increase taxes on the wealthy, have private-public partnerships. Is that sensible?
Yes, it is, in part. The actual solution at the end of the day is that this free enterprise capitalism is broken. You cannot have 90% basically of all profits, operating profits, go to the shareholder. That's wrong. You have to start with society. Society means people. So yes, education, training, retraining. There are no early education there. There's no kindergarten for these people. It's a disastrous education. That's why we rank in OECD charts at the bottom of the developed world. So that has to be fixed. But you start with people. You have to start with people and workers. And unless you realize that people are not a cost, just a cost on the income statement, then you're not going to fix the problem.
So is it a government solution then? Because you do these Wall Street guys coming out, they're saying it's bad, they're giving these solutions, and my question is, and what are you going to do about it? So is it up to them, or is it up to DC?
It's up to, I believe, business. Look, we are responsible, importantly, for helping create the problem. Now we have to stop denying, stop deflecting, and realize that it's up to us to begin to fix the problem. Yes, government can help us incent the right incentives, not the way the tax plan that just went through was designed, but really incent people to behave, people meaning business, to perform in the way that really helps society. But we have to change. That's the problem. I think business has to take the lead.
So, Torsten, as Peter says, basically people act in enlightened self-interest. And if you're a CEO, how long will it take if you pursue a plan of investing in your workers, of investing in some of these long-term things, before it shows up in productivity? Is there an incentive to do that or not? Or do you get punished by the street?
No, so the OECD has looked a lot at that question, and it actually is always a good idea to invest in your workers and invest in everything, diversity, invest in human capital, invest in increasing qualifications, because ultimately it raises productivity. The problem is that the reporting season, as you know, is every quarter you need to deliver earnings.
Yes.
So if you come and say we had an enormous amount of costs, people will say, are you sure this will pay off? So the way that the system is organized by having quarterly earnings reports is actually putting a lot of short-term pressure on managers to have the long-term outlook exactly that we're talking about here that's required.
And then so taking one step forward, then what's going to be the actual catalyst for companies then putting money to work? Like if the tax cut didn't actually do it, we saw manufacturing jobs last month actually fall. That doesn't seem really good for CapEx. And then we're prepping for some kind of downturn at some point. Like what's the...
So that's the difficult thing. I mean, if you let the market speak on its own and you have to then make incentives for companies to make the right decisions, and it really is up to the politicians. There's a lot of best practices around the world.
Is it coming down on buybacks? Is that the right one? Is it saying no more buybacks, guys?
So the answer is that you want to incentivize companies to actually do the right thing, and then you can figure out what the right thing is. And you could do that in many different ways. You could do that with tax subsidies. You could do that with incentives in various ways through the tax system. It doesn't have to be complicated. It's just saying that we need to get those priorities right in terms of what it is exactly that we want.
So, Peter, I wonder, as I listen to Torsten, how much of this is a question of patient capital? Take an example, a specific case example. Walmart, about 3 years ago, said, you know what, we're not going to make as much money for the next 2 or 3 years. We're going to invest in our employees, increase the salaries. And at the time, their stock plunged. Now we're seeing it resurge, but they have the Walton family behind them. They don't have to listen to just the ins and outs of day-to-day shareholders.
Yeah. You see, I want to give a shout out to Ray Dalio and to some degree to Jamie Dimon as well, because it's time to realize that there's a crisis here. The reason to change is because the current system basically is not going to be sustainable. Either politically, at the voting box, or in the streets, people are going to say, enough already. That's why understanding the problem is so important. People have had it. In fact, the 2016 election was about that. Trump won and Bernie Sanders was so powerful in challenging Clinton because of the problem. The problem has gotten worse. It's not sustainable, folks. So actually, free enterprise capitalism itself is at risk because people are saying, hey, the system is broken. Capitalism is no longer working, it's broken. It's not true. It's doing the wrong things because that's what we ask capitalists to do.